That's 100.
Y'all, what's going on, man? We are back, man. It's been a couple weeks, man. A lot of things been happening, a lot of things been going on, but it's definitely first and foremost excited to really, be back here in the building. Monday Night Take here with TR. I'm super duper excited for tonight's episode, tonight's show. The Fed Reserve has a big dance. We got a lot of market updates, whether it's layoffs, bank industry. I feel like, man, I took the weeks off, kind of at the wrong time. It's just been crazy. Some of the things that we kind of seen unfolding, here, not just in the markets, but I just even think across the world. It's just been a lot of crazy stuff that's been happening. So we want to discuss those things, break that down. You guys want to go ahead and have, your pens, your notes, everything. You want to have everything out tonight because it's a big day. I'm gonna be honest with you. A big day on Wednesday. A lot of different people thinking a lot of different things on what the Federal Reserve is gonna do. So I think it's definitely a lot to unpack. So we're gonna take it from the top here. I want to pretty much get into things. One of the hot topics today is there were some people that were sent home, from their jobs. What does that look like for people here right now, TR? In the job market, right?
Yeah, like
Reserve. What's it looking like job market wise right now?
like right now it's pretty tough. I think that a lot of people are really in limbo right now. Okay, so and to give you guys really I guess some context of what's happening. So as of today, even Meta laid off 9,000 people. So right now we're at 115,000. In terms of people that were laid off. Okay. Last year we were at 140,000. So right now we're already at 82%. Okay. That's a lot. Okay. 115,000 people since January 1st. It's crazy right now. So in terms of what's going on with this Silicon Valley bank fiasco, in terms of employees, if they're not getting paid, that means that they're missing out on their benefits, those 401k contributions, of course, their wages, tuition reimbursement, everything. In all honesty, Lawrence, it's like a triple effect right now. Okay. Now, what's interesting is that what's going on is, we know that wasn't none of the owners' intentions, right, for the Silicon Valley Bank to have this disaster. But this breaches also a few Employee Labor Act laws too. Okay. In terms of them not getting paid, and there's nothing in writing that talks about them not having access to payroll. So employees can technically sue for real, in terms of assets that they've lost. So right now we're in murky water in terms of employees, unfortunately. So
Definitely. Yeah. So that's just tough right there. So that pretty much opens up the can right there.
Yeah.
Now with some of the things that have happened over the past couple weeks, we went from people expecting an interest rate hike to now the Federal Reserve fund rate futures, right, are now actually pricing in that there might be no rate hike on Wednesday. So I want to really discuss that and my thoughts on, what could potentially happen heading into Wednesday. We're less than pretty much 48 hours until our next Federal Reserve interest rate decision, which is huge because you're talking about interest rates tapping, potentially 5% for the first time in over 15 years, right? So that's a long period of time without interest rates being anywhere near 5%. So, there's a lot that's transpired that's kind of making the Federal Reserve say, hey, we might double back on some of the things that we've been thinking about. And, we might go ahead and just kind of chill out for right now. And, I think there's a point where the Fed, right, is looking to potentially bail out, right? So some people are expecting the Fed to come in and save. And that's where I think the market could be getting a little bit ahead of itself, which could be dangerous. Because let's say everyone starts to think that the Fed is going to pause, not going to do any rate hikes here or maybe even for the rest of the year because of certain things that have transpired. But then the Federal Reserve still goes ahead, hikes interest rates this time and another time. I think the market will be truly disappointed if that happens, and I think that you could potentially see a maybe a sell off. Now, an event that magically somehow on Wednesday we leave Wednesday and there's no rate hike, a stock market more than likely probably with no rate hike on Wednesday, the market will probably run up at least 2 to 3% that day. It definitely be excited about that and probably be happy at least for that day. With all that being said, what ways am I looking to play this thing?
Right.
I've kind of sat on the sidelines for the most part. It was good to see. I will say this: it was good to see past couple of weeks that there was more volatility that was coming into the market, so you were able to see some movement, which I thought was pretty good. Um, you are seeing certain stocks, just to put those things out there. And we've talked about these names on the show before. You take a look at even a Nvidia, right? Hell, me and TR, we were in Dallas. And I think that was like what, January 20th, and Nvidia was like
Yeah.
150, $160. Nvidia stock is now 260. Um, so you just take a look at things like that, and that's why I like kind of continue to tell people is like, and I see Claire, she just put it perfect. Chaos equals opportunity, and that's pretty much as simple as it gets. Chaos equals opportunity. And when people are asking me, hey, Lawrence, what's going on in the market right now? What's your take? What's this? What's that? I say, yo, all of this, chaos is just market opportunity. And it's cool. You know, um, there's not many times that you're going to be able to get the opportunity to buy some of the best world class companies, at an extreme discount. It's just bottom line. And I told people this months back. I said, yo, there's gonna come a time you're gonna look at Nvidia and you're gonna be like, man, it was at 110 and I didn't buy it. Now it's sitting here at 260, almost hitting 270. And I come back and I'm looking at my DMs. I have 50, 60 DMs, and I probably could say at least 20 of them was probably asking about stocks like Nvidia and Tesla. And it's like, this is the reality. When there's blood in the market, there's a bunch of opportunity, just like in the labor market, right? A lot of people are talking about the layoffs, but there's still a bunch of opportunities. So, like, it'd be easy for us to come on here and talk about, well, the bank fiasco, this, that. I want to talk about the opportunities that really are presenting themselves, because, in my opinion, like, let's just be real. The banks are having issues right now, but pay attention to what's running. It's no secret that crypto's been running the past few weeks.
Yo, pause. I knew you were gonna bring that up. I knew it. I knew it, but it's true. It's
I
true.
mean, there's always like and I'm glad that you said that, because there's always opportunity in something. I mean, it's really just common sense. If there's issues happening with the banks and people are losing confidence in the banks, where are they going to run to? They're going to run to crypto, because that's a banking alternative to some people's opinions. People want to debate that, whatever. That's the reality of what most people think. So when there's chaos in the banks,
Mm-hmm.
people are going to run to crypto. So when people ask me, well, Lawrence, why did Bitcoin hit 28,000? Well, I just need not, like, have you not cut on the news, or have you not paid attention to what's been happening? Everyone's, whether rightfully so or not, whatever, this fiasco has now dampened sentiment in the banking industry, right? And with this sentiment being dampened, what's happening is people have now went into crypto, things like Bitcoin, things like Ethereum, stores of value. So you see those things. I wouldn't be surprised to see Bitcoin at 35, 40,000. So, and you could take a look. We could look at it even from a technical perspective as well too. When Bitcoin hit 15, 16,000,
Hmm.
and it fell from 64, it fell from 64, I mean 66, all the way down to 16. It's like, yo, you got to understand, on that way down from 66 to 16,000, there was so much chaos, and there was so much doubt, and there was so much fear, right? So
Mm-hmm.
when it got finally to 16, there was so much doubt and fear that no one really wanted to touch it. But in reality, that's the best time to really buy any asset, any stock. It's usually the times where there's the most fear, the most uncertainty. That's usually going to be your best time to be able to buy, the stocks that you want to buy. Like, I'll be honest with you, those are usually your best times to buy. Um, and you've kind of, like I said, you've seen that consistently over and over again throughout history. So that's kind of like, my mindset here right now is really just being, patient, allowing the opportunities to come to you, and really just sitting back. So yeah.
So listen, I have a question for you. So I want to know, like, do you think that like the rate that we're going right now in terms of this currency, do you think that the US dollar will still hold weight, or do you think we'll be like transferring to something else like gold? I'm just curious to pick your brain about this.
Yeah, nah, I think great question, and I know a lot of people probably had the same questions.
Yeah.
Um, I think that we'll never shift to like anything like gold per se.
Mm-hmm.
If you do take a look at a lot of the documents that were in Congress during the pandemic, and even still now, there's already been laws that have been written and certain things that have been, kind of put together that have really already highlighted the ability for you to see a digital dollar come about, right?
Yeah.
So all of that stuff is literally in the works. So do I think we're going to necessarily move away from the dollar? No. I just think that over the next few years, over the next decade, I think that you'll see a transition into a digital dollar. And you've already seen that now, because most places that you go to, a lot of times they're only taking digital forms of payments. A
Yeah.
lot of places don't cash, right? Cashless, type society. And I think that's where we pretty much maneuvered and shifted to throughout the pandemic. So I think that you'll just see a digital dollar more so than anything.
Wow.
um One thing to talk about as well on that point, while people are concerned, that's where I think a lot of this, I guess you would say, chaos issues are, coming about, is to make that transition, because there's always like an agenda to every type of move, right? So I won't say that I was necessarily, like, I wasn't surprised that there was an issue. I guess it was like, yo, there was a gut feeling that was something that was telling me that something from the left was going to come in.
Yeah.
The grand scheme of things, if you really look at it, the stock market hasn't really wavered much, to be honest. Like, the bank stocks have gotten hit, but the overall markets are pretty much in the same position. So this doesn't really change any of my feelings long term about anything.
Mm-hmm.
That's another thing that you could tack on the board, and you could literally, this is another thing that you could tack on the board and say, well, there's an issue, right? This is just another one of those issues that happens along the way, and it's part of being a long-term investor, that there's not always going to be something crystal clear for you kind of cut. There's a lot of times there's going to be these little issues, and that's just part of it. And I just look at this, like, I think like 6 months from now, we won't be talking about none of this, in my opinion. I just don't think that 6 months from now, this is going to be a big story. Yeah.
Yeah, I can imagine that. I can imagine that. But I'm also curious to see like really like when this recession is going to hit too, because in terms of like research, I'm just seeing different timelines. So this will all be interesting to see how
Yeah.
everything pans out.
Yeah. So you got this. So check this, right? So I think last time when we took a look at the unemployment numbers from, we got those, like, I think that was the first week we took off. Uh,
Yeah.
I think it increased, a little bit. I think it went to like 3.6%.
Yeah, yeah, yeah. It is at 3.6.
Jerome Powell, he spoke about this. You know, there was a point where he had went before Congress, and they were having a conversation, and essentially there was like, hey, are you going to, have it to where now you're going to see people, eventually go ahead, and about 2 to 3 million people eventually lose their jobs, right? Because of what the Federal Reserve's action on the line. So that's one of the things that's, been discussed and talked about. I think that employment is super huge, especially when you're talking about anything, whenever you're talking about a recession or whatever you're talking about a contraction in any economy. Employment matters the most, because you have to be able to gauge and see, well, how many people are actually employed, because
Right.
you start thinking about the cost of living increases, inflation. I think people have realized that inflation is a lot tougher to get rid of. And to be truth be told, um, even saying get rid of is kind of like even the wrong terminology because let's be honest, when has inflation ever been gotten rid of? Like, just think about it. Like, prices have always gone up over time forever. Whether it was, there's been certain periods where it's been drastic increases, right? But there's also been certain times where it's been a lot slower. So in the grand scheme of things, if you look since even the 1920s, I mean, take a look at the cost of bread in 1920 to what the cost of bread is today, or the cost of eggs. So inflation never truly goes away. It just does have its moments where it moves at a faster pace than others. So I think that's important to highlight as well too. Yeah. Yeah. So
That makes
that's
sense.
yeah. Nah. So inflation. And that's where I think, even for UTR, when you're having people negotiate their salary, that's an important thing as well too, because people should be basing their negotiations off of, hey, I can't keep getting paid the same amount. And that's where I think you run into issues where if people aren't getting proper pay increases, but the cost of living just keeps going up, it's like, yo, the second job don't even help at some point.
No, you're right about that. And then also what's happening too with like a lot of these employers that want to streamline their processes, they're putting
Mhm,
a lot of work on their employees. And so I feel like it's like we're all on like a hamster wheel, right? And so
mhm.
what's going to happen is that when they get burnt out, they probably will be leaving too. Like we also saw, I mean, I actually people like back in Maryland and stuff like that. They were telling me that for like some of their cousins, like unemployment, they were earning more off of that versus what they were actually getting paid. Like even because I actually like ran a study too. Like we're looking at like white women, right? Like white women, they make 70 cents off of a dollar, but as black women, we make 62, right? So even off that, I feel like it's a constant battle. So that's why it is important for you to negotiate because I think it gives you a stronger playing field even when you start, because it's going to matter when like those stock vests. It's going to matter when you go up for like performance reviews off of that percentage. Because even if you can start at a higher like salary, you'll go a lot further in terms of how much you can earn like from that company. So yeah,
Yeah, there's been a lot of issues, and the great point that you mentioned there, because that's where I'm really looking at, because that's where I think there's a big bubble, right? There's a bubble between when you take a look at defaults on mortgages, there's a bubble. You're taking a look at uh, car note defaults, like just a lot of different things, just kind of really hitting everything's really hitting at one time, which I think is like that's where the worrisome comes for me, because I'm like, I take a look at all this data and everything happened at one time, everything kind of hitting the fan. It makes you wonder and it makes you think. It's like, yo, you know, where are we heading to now? Right? That's what it really makes me wonder. Where are we going to? Because eventually there's going to be something that breaks up or something that breaks down. Eventually one side is going to give, right? Like, how long can we continue to before the Fed steps back in? And I think that's where, I highlight in our title of our episode, the Federal Reserve's big dance. It's like, will the Federal Reserve, will they come in and bail out once again? And when I say bail out, you got to do more than just bail out the banks at this point, because now it's like, yo, people are starving.
yeah,
People need a bailout. So now it's like, are you going to sit here through all of this that's been transpiring and happening and still raise interest rates, still make the cost of borrowing more expensive, still make those car notes more expensive, houses more expensive, goods and services more expensive? Are you going to do that? Because you're literally going to push the economy, like you said, it's already in a recession, but you're going to push it potentially into a depression. And I think that's where it's a lot of wearisome type of.
yeah. I mean, it also doesn't help that this country's in a lot of debt. Like we are like 97%. So yeah,
Yeah, just a lot of issues,
it's a lot going on in the United States.
a lot of issues all happening at one time, mind
Right.
you, while there's still wars going on outside.
Yeah, it's
while
very interesting. This time
leaders
is
are still, yeah,
yeah, this time is very interesting. That's what I can say. It's,
yeah.
it's interesting.
So yeah, I mean, and I think for me, it's like, people always ask me, so, what's my thoughts? It's just like, yo, pay attention to the trends. Pay attention to the trends. Like, I don't like, even going back to the crypto point, it was really kind of like common sense to me to expect crypto to go up, because like I said, if people are losing confidence in the banks, right? If they're losing confidence in the banks, there's really only one place that they're more than likely going to run to, and that's going to be crypto. And so that's why you're going to see probably cryptocurrencies go up probably for at least for the next few months, just off the strength that, people right now have lost confidence in the banks. But this kind of brings back that discussion of, for people that are, really heavy into crypto, and, people are going to definitely, push that on. Right. So yeah, that's kind of where I'm at with it. I think as far as best practices right now, I think going into the Federal Reserve interest rate decision, I think it's really make or break. Once again, it's a make or break type moment for the market, but in the grand scheme of things, once again, the market is in the same position that it was in last Federal Reserve interest rate decision and the one before that. So if you're, once again, as a long-term investor, throughout all this chaos, bank crises, Federal Reserve, uncertainty, layoffs, most stocks, most investments have still went nowhere, haven't really went up, and haven't really went down. So it's like, it's going to get to the point where a lot of these little headlines are not going to matter. The layoffs, eventually, they're not going to matter. The bank SVP, all this stuff, Credit Suisse, all this stuff it's just not going to matter. It's going to be like the past, right? Like, I want you guys to think about all the headlines that, since you've probably started investing or maybe paying attention to, economics or the financial markets, whatever. Like, who talks, like, think about this. At one point, COVID was a big overhang on the stock market, right? Oh man, is COVID going to be over? Oh man, what's up with the vaccines? When was the last time you heard about COVID? Seriously, now I'm just asking, when was the last time you heard about COVID?
Right, you're right.
You haven't heard about it. Is the stock market fine? Is it still alive? Are stocks still moving? Is it still breathing? It's perfectly fine, right? You know, you had issues with January 6th and the president of the United States. You don't hear about that stuff anymore, right? You're all these different things, like, eventually it's just not gonna matter.
Yeah.
So that's kind of like really my thought process, is just like, there's a temporary opportunity to invest more in certain areas that might be declining. Like, even for me, I'm gonna say this, like, I'll be honest with you, I don't see the what's it called? I don't see the banks going anywhere. So right now, even when I'm seeing these bank stocks fall, it's like eventually these banks are gonna come back up.
Yeah.
Like, it's just a lot of these banks are gonna come back up. Like, JP Morgan not going out of business, Goldman Sachs not going out of business, Bank of America not going under. Contrary to what people might believe, right? Don't get it twisted. So while these stocks are falling, pay attention to pay attention to what's going up, but that's what can give you an edge. You see, everyone that's worried about talking about all the stuff has now missed the little run that happened in crypto, right? And it's always good to buy when everyone else is fearful. And I think the most recent examples outside of the banking crisis was really Tesla and Nvidia. I think those are two, like, crystal cut, because, like, Tesla was a good one because it was actually going through it wasn't going through a huge crisis, but it was going through like a mini crisis. And that mini crisis was this: cars were expensive, they had to slash prices, And at the time, people didn't understand. People like, hey, what is this man slashing prices of cars 10, 20% for? It didn't make sense when he first did it to regular everyday people who are just thinking small minded. But in the grand scheme of things, it was a smart choice. Why? Because if you know that, people are kind of, hurting right now, they ain't got the same money they had before, but you still want to make your product available to people, it would be smart of you to slash prices, right? Because you know that, hey, we slash some prices. Yeah, we might be taking a little bit of cut on the prices, on these price cuts, but at the end of the day, you can move inventory a lot faster and a lot more efficiently the way you want it to. You take a look, so you take a look at that, all that turmoil, whether he was selling a stock to go buy Twitter. Notice you don't hear about none of that no more. When was the last time they said, hey, why did Elon buy Twitter? You don't hear about none of that. That's why we say it's like any headline is really just temporary. Temporary. Remember, Coinbase was supposed to go out of business. Last time I think I looked, Coinbase is up 100% from the lows. Well, Coinbase was supposed to go out of business. That's why I'm just getting people to see these different trends. So the moment that you think, that something is, dead or done, I want you to really just sit back and just allow yourself for a second to really look and say, man, I'm gonna hold off on just, running those narratives and saying, man, this is dead, this is done. Like, just be a little bit more patient with yourself. I think that's super, super huge. So yeah, that's one thing that I definitely wanted to say and highlight.
Okay, that's
Yeah.
great. But that's why you say patient pays.
Yeah.
Now,
Go ahead.
so listen, so even like for me, I'm still learning about the stock market. That's why I really appreciate like to really be on this show. So what would constitute the stock market to crash?
Mm-hmm. Yeah, great question. Um, the only thing that could make the stock market crash from here would be none of these current headlines,
Okay.
right? What makes the stock market crash, right, per se, is when it gets hit by an unexpected event like left field. Like it needs to take, in order for the market to really drop 10, 20% from here, or even fall 50% from here, you need something from like the left field to happen, where it's like something that's like, for example, let's say like something left field would be like China declaring war on the US, right? That would be something that, okay, people be like, whoa, whoa, whoa. Like, you'll probably see the market down 10% after hours, because people be like, whoa, what's going on? Because of a fear. Like, in order for the market to crash, people have to really be afraid, because the market crashing is really an emotional thing more so than anything. It's it's people wanting to take their money out of certain companies, certain
Mhm.
equities, because they're fear. Like, if you take a look at COVID, why did the market crash during, even though it was brief? Well, people are
Right.
like, yo, a virus, Chinese virus, like, all to think about it. You had a president saying it was a China, so people are internalizing all of this and saying,
Mhm.
what? I was supposed to retire. Oh man, take my money out. You got billionaires saying, hold on, virus, pull this thing out. So it's like, yo, that's what causes a crash. It's just like, and great question that you asked. It's the same thing that's happening with these banks, right?
I was just about to say that because
It's
like the founders, the venture capitalists, they're all removing funds, and that's why, like, well, that was part of the reason why it crashed, like for real. So yeah, that's definitely parallel to that. Yeah.
exactly. So that's great. I'm glad you said that. So that's the reason why, like, if you take a look at the banks, like, it's the same process, right? People lose confidence in the banks,
Yep.
right? They lose belief in the banks. And what do? They take their money, out of the bank. That's literally what happens. They
Yeah.
literally take their money out of the bank. So, that's one thing that I personally would say is like,
Yeah.
that I'm looking at and I'm paying attention to. People are gonna take their money out of, the banks. It's the same type process as,
Gotcha.
when people take their money out the market and the market crash. So yeah.
Yeah. So it's basically like a liquidity crisis, basically.
Liquidity
So
crisis. Yep.
yeah. Okay. Okay. Yeah, because even like when everything was going on with Silicon Valley Bank, I'm like, y'all lost 80% of y'all value in 24 hours.
Exactly.
Like, and even think about this, like I know that like from like insurance, they said they were able to claim up to 250,000. Okay,
Mm.
what is that like? Maybe two salaries for someone that's in a couple of years of their career. That's nothing compared
Mm.
to the billions of dollars that are in there. So it's, oh my gosh, I actually know that some of my clients came to me and said that, yeah, I was affected by this. I had 20 clients that came to me, and I'm like, we're gonna figure it out, y'all. We're gonna figure it out. We're gonna figure it out.
Yeah, it's tough to. It's really tough to
Yes.
get those phone calls. I can imagine.
Yeah, yes, yes. But all I can say is like God is good. He's opening up doors, but you still got to put in more work, like so to speak. Is like we can't pray for aid doing C-level work. So
Yeah.
that's why I would say for everyone that could be looking for a job, you should always have a backup plan to the backup plan.
Yeah.
Because after I left LinkedIn, they had 3 layoffs. I could have been affected by any of those, honestly. And
Hmm.
I know that even though I know like I went full time with my business, I had connections at Google, Microsoft, and Salesforce, so I was gonna be straight. But I
Yeah.
had to make sure I had to create my own contingency plan. So I want everyone to do that too, even for like your stocks as well. What is your backup plan to that?
Yeah.
Like honestly, right? So like, what else do you have to fall back on? So yeah.
Yeah. Nah. And I mean, just you said it perfectly. Like what's the overall plan? What's your overall goal for what you're trying to do and what you're trying to accomplish? And I think here right now, um, the name of the game is really just accumulation because you're being given time, right? Like the market is not going anywhere. And I think this is the point that I've kind of like really been hammering home is like I don't really expect the market to go anywhere, to be honest with you. For
Mm-hmm.
I would say for the rest of I would say at least I don't expect the market to go anywhere at least until 2025. I'll be really honest with you. At least till so I'm looking at a year like this year where the market will probably be flat like pretty much all year, right?
Mm-hmm.
You take a look even going into next year. And the reason why I'm saying 2025 is because that's potentially where you could see a new regime take over from a presidency standpoint.
Right.
And I just think there's a lot of different issues that the world has to get through right now, right? And I
Mm-hmm.
think as the world gets through those issues, which I think will be seamless, there'll be some hiccups, but time goes on and time will tell all. But I think that the way that the world will get to, by 2025, I think that's really you're seeing the like the little things being put in from an automation standpoint right now. But I think that the world will start to be on autopilot by no later than 2026, 2027. I think the world will be completely different than what you're even looking at now. And then I think by 2030, 2035, the world will be completely automated by then.
All right,
So
listen. We got to remember that you said that because we're going to check it years from now, okay? And we're going to basically examine like what you said was true, okay? So we got to do that
sure. Yeah, now automation is where
for sure.
and
Yeah,
that's where the biggest investments are being are happening right now.
yeah.
Automation from whether it's AI technology standpoint,
Mm-hmm.
everything. Businesses are automating,
Yep.
which is why they're laying people off, in the first place, because they're like, hey, we're going in a different direction than what we thought, right? So
Right.
businesses are just thinking differently, thinking kind of like more just in the future. Like businesses are looking to set themselves up for not
Success.
just success, like just bottom line. They're just looking to set themselves up for success. So
Yeah,
yeah.
I mean, you're right about that. So you have like companies like Amazon,
Mhm.
Meta, for instance. I mean, they're having a lot of layoffs. And I remember in the past, they were looking for like the type of talent for like people that really had niche skills. But now they're looking for talent in terms of like overall, like how much can you bring to the table, right? So like,
Yeah.
how do you know like Tableau, Jira, Python, SQL, things like that. So you're right. It's all about scaling right now. And actually, so what we can do is, Lawrence, let's get into this job market report, okay?
Mhm.
So what I want to share with you all is that it's looking a little bit more positive than last month. I can say so. Literally, y'all. So since January, the United States we added in $10.8 million jobs. Okay, I mean I'm sorry, openings. Now, in terms of February, because I ran the numbers, there were 311,000 new jobs that were added. Okay, in terms of this vacancy. So the top actually came from hospitality and leisure. So they added 105,000. Okay. Next, you're going to have education and healthcare. They added 74,000 to the mix. After that, there's retail at 50,000. Then the government, first of all, we got to definitely do a show on that. The government actually added 46,000. Okay. So this is definitely prime time for you all to join, as well as construction. They actually added in 24,000. So as of right now, and also what Lawrence mentioned, that the unemployment rate did increase by 2 points. So we're at 3.6%. And something else that I want to share with you. So I did some reading on PwC's Pulse survey. So this is like a survey that's that they basically connect with chief HR officers, and they're basically sharing in terms of like what are their intentions for the next 12 to 18 months. So as of right now, like what we said, literally what Lawrence just said, automating processes, that is the name of their game right now. Okay. So they're going to get it several ways. So they plan on doing some type of shrinking of their workforce, but what they're prioritizing are early retirement. They're also looking at, companies right now like Apple having hiring freezes. They're also like gauge your performance. So like meaning you have your performance reviews, you guys got to make sure you guys are hitting all of your numbers, all of your goals, because they're looking at that now as well. Okay. So like basically doing early retirement and performance evaluations are the main ways in terms of how they're cutting employees right now. And then also, they're also not replacing employees that are leaving. So remember how we mentioned employees could be getting burnt out. They're not replacing it. They're just looking to basically reallocate their own current resources. Now, what's also interesting is that it's just crazy, right? We went from having like the great resignation to the great like balancing, I guess, like situation of where we're at right now. So as of right now, these chief HR officers, they expect 47% of their workers to be in person 4 to 5 times a week now. Okay. So they really are trying to push, barely hybrid basically right now. Because if you think about it, right, during COVID, there were a lot of buildings. There were a lot of buildings that they bought and they want to fill it up, which I get it. They can't get out of these mortgages right now. So it makes sense. Now, in terms of tech, I will say this, and then also too, when we ran those numbers earlier, that's specifically for the tech industry, okay, in terms of layoffs. So 115,000, I repeat that, people have been laid off since January 1st, okay? And I need y'all to understand how just real this is getting. Last year, we only had 140,000. So do you understand? We're almost at last year's number. I'm pretty sure probably by next month we'll be there, because bank is about to take a hit. So is the entertainment industry with layoffs that are up and coming. Now, something that I want to share with you all is called the WARN Act. So the WARN Act stands for Worker Adjustment and Retraining Notification Act. So this is a great way for you all to get ahead of layoffs to see. So what it means is that companies that have over 100 employees, they have to give a 60-day notice that they're in terms of them having mass layoffs. So this is just a great way for you to notice. And then what's great is all you have to do is just type in Warren Act State, and then you'll see it. So I did it for Texas. In Texas, as of January 1st, they're at over like 6,800, like basically like layoffs. So that would be like a great way. And it basically shows the companies. It shows the day that all this is happening as well. So this would be a great way for you to get ahead of it. So I run Georgia's numbers actually right now, and I'll tell you guys like what that is. But yeah, so it's definitely like important for you all to stay ahead while you can. Okay. So that's why I want you guys to get connected with these staffing firms. It's never too late really for you to start networking either. Okay. Network with these hiring managers, get those certifications, because now is the time. Because I don't want that to happen like with all those companies in Silicon Valley Bank. That's over 1,500 employers. That's a lot of people. A lot of those 1,500 employers, over 300 employees, thousands of jobs. Okay. The life is limbo right now until Wednesday. So, yeah, as of this labor market, I would say please get ahead. And something that I really want to stress on is just really the importance of just thinking about going to the federal side with the federal government. It's very stable. Government contracts are very expensive, especially you guys could do definitely multiple ones as long as it's not a conflict of interest. But it has its own separate process of what you can do. So we can definitely do a show on that, Lawrence. Because I've
Yeah,
had a
because
lot of clients get.
people been asking for the plug on them government jobs. People
Oh,
love
yo,
that.
I'm literally about to do a reel tomorrow or like Wednesday, whatever. I'm dropping it, but I'll give y'all a little sneak peek. So, in terms of the federal government, well, one, I would say make sure that you create an account with usajobs.gov. That's like half the battle right there.
Okay.
And what's also important is that for you to really understand like how their pay scale works, so they call it like a GS scale. So it ranges from GS1 to GS15. But a lot of times where people trip up, Lawrence, is that they're not applying for the right rules, okay, at the right level. Because you have sometimes people that could be like in management, they think they qualify for like a GS 13, 14, but really they should be at a GS 9, technically, in terms of experience. So it's important. And another hack that I want to share with you all is, so if you ever see these little clocks, it's like red and yellow. What that means is that that job is only open for 1 to 3 weeks. So that's the best time for you to get ahead of it. Because many times you see the federal government, y'all, these jobs can be open from like 4 to 12 months. Okay. It
Yeah.
takes forever. So I've had clients that experience that and they want to get in callbacks a month later, which is pretty quick for the federal government.
Yeah.
And then
Because
like
it usually takes like what, 3 months, sometimes even 6.
yes. Oh my gosh. Yes. The whole process. We're at like turtle speed, really, in terms of the federal government.
Yeah.
Oh, and then something else that's also important to note. So with the federal government, you have to fill out a form. It's called like a KSA, like a knowledge skills like type of thing. But it's a great way for you to elaborate more about your experience. But with the survey, you should always select expert. That's how you bypass their bots. Okay.
Mm-hmm.
You didn't hear that from me, but I'm just letting you know how you bypass that is always to select expert because you automatically get declined when you don't. But that's what I'll share a little bit, but I'll share more when we speak about that. I'm gonna give y'all a few nuggets, but yes.
Nah, she dropping gems. So repeat that website one more time for those that may have missed it.
So it's called usajobs.gov. So that's where you can see all those federal agencies. And whether you're looking for state jobs, federal jobs, you need to have a federal resume. Okay.
Mm-hmm.
And with federal resumes, y'all can elaborate till the cows come home, like whatever. Like that's where you can get really like into detail. But what really makes you stand out is also like taking like trainings, workshops, getting certifications. That helps you. It really goes a long way on a federal resume.
Yeah, nah, because I'm glad you said that because it's like, I think like we've highlighted this before. Like we went through like that great resignation period where kind of like everyone was like, yo, I'm done. I'm out of here. I'm resigned. And, we ended up getting to the point where it's like now we're out of that period. But, the real reality is that, people need their jobs. Like that's the real reality is like, yo, people need their jobs. Some people want their old job back.
Right.
And the deficits that we've seen, like inflation is like super high, like super high still. And for me, it's like, what ways can we allow ourselves and put ourselves in positions to really benefit? And I look at it and say, yo, right now, go out there. Like there's companies right now that are looking for people, right? Maybe there's some skill sets that you can acquire that can put you in the right room, right position, right? There's a lot of even when you think about cybersecurity, right? That's just one that just keeps ringing in my ears.
Cyber's huge.
Even when I'm just waking up reading early in the morning, just seeing the different things that are opening up in the cybersecurity space. And it's needed when we to start thinking about digital. Like when these crises happen, I know people, it's true. There's jobs that are lost when there's crises that happen like this. But there's also jobs that become open. And that's where I'm kind of like trying to push. Like there's going to be security jobs that open up because of the certain things that happen, right? There's going to be new analyst positions that are going to be happening. Like when I go out in the real world, I'll be honest with you, I don't see a lack of companies hiring. What I see is I think there's a lack of ambition from people to go after those positions. But part of it is, and it goes back to the high cost of living, because people are going to sit back and calculate and say, well, I'm going to get paid X amount here, but it costs this much to live in this city where it's super high, where the cost of living in that city is super high. So you got to factor like all of those different things into to your mind. And that's kind of where really where I'm at with it is like, yo, super, super duper unfortunate, but it's the reality. So, yeah.
Yeah, you're right.
Mm-hmm. Yeah.
You're right.
Um, so heading into now, I mean, we're pretty much done with Q1 now. It's crazy. Q1
Right.
flew by. So we're at pretty much at the end of March here now. You're gonna be tapping into Q2. I think it's fair to start, giving some I'm gonna start giving some early predictions. I think I did a few in Q4 of last year, giving us leading us here into Q1. I'll be honest with you. The market hasn't really done anything. So,
Yeah.
I mean, we're pretty much at the same point that we was at before, right? We're pretty much at the exact same point. So, I mean, just continue to accumulate has been my number one thing. I said it in Q4, and I'll say it again. Continue to accumulate. If you continue to accumulate and continue to put yourself in position, you're gonna win. Bottom line, that's the reality. How I look at it. So I just tell people it's like, yo, continue to accumulate. Do the little things when people don't want to do those little things, because that's what's gonna put you in a situation that you want to be in, right? Do the little things, and everything else will take care of itself. And that's kind of really the reality here right now. So, um, yeah, that's one of the number one things that I would say. Anything that you want to add on that you would say?
Yeah. So what I would say is, although I mean we are seeing a lot of layoffs, I still see some peaks in terms of where people getting higher for the unemployment rate
Right.
to go down. So I am excited for that. I'm praying for this as well. I am. And the one thing that I will say is don't forget those top markets, what we said at the top of the year. Okay. So we said renewable energy, artificial intelligence.
Yep.
We also said healthcare, education, consultant. These are like the best times if you want to get something where it's stable. Definitely the federal government. First of all, the benefits are amazing. I just want to say that. Majority of my family works for the federal government that are on my DC side, Lawrence. So yeah, I know a lot about those, just about that process. But yeah, I would say like definitely get ahead, but start networking now. That's what I would say. I can't stress it enough. Like just really using like these staffing firms is going to get you ahead because they already have partnerships with these companies that you want to work at. You
Mhm.
already have a leg up unless you get a referral at these companies. So I would say, yeah. And again, always have a backup plan to your backup plan. So yes.
Yeah, nah, perfect, 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 perfect. So, I want to move in before we close out tonight's show to talk about the Federal Reserve pretty much Wednesday. Like guys, they're gonna potentially not raise interest rates. How crazy is that? Who would have thought? But it's really two narratives that really is gonna happen on Wednesday. It's really only two things. Either Federal Reserve is gonna stick to schedule and they're gonna raise interest rates, and the market probably won't be happy about it, or they're gonna come in and quote unquote bail the market out, right? And the reality of that is like my opinion is uh, I think they're gonna end up bailing the market out. I think that they're gonna end up not raising interest rates. I think they're gonna end up keeping interest rates the same on Wednesday. And I think that the market will go up at least 1 to 2%, if not 3%, if that happens. Um, there's like the Federal Reserve Fund futures are already pricing that in, so I would keep that there. Um, I think that's really where it's at, man. I'll be honest with you. I think that's where it's at. Like, I don't think that they're going to raise interest rates, and I think that they're going to keep interest rates the same, and I think the market will rally off of that. What does that do for the next meetings that happen in May and June after this, and what does that mean for earnings season? I think now the Federal Reserve is kind of the Federal Reserve is already losing credibility, but now it is, and now it's losing credibility more because it's like I think the media makes, well, I won't say media. Well, yeah, I will say media. I think the media pressures a lot of these decisions, but I think we live in a world today where the media can pressure things that happen, right? The narrative that's written eventually puts people in certain high positions of high power. It makes them responsible to answer to those things, right? So I think it's incredibly difficult. I'll be honest with you. I think it's incredibly difficult, um, you know, to for that to kind of happen. I think it's incredibly difficult position that the Federal Reserve is kind of in now. Because now it's like you got to answer to not just investors, not just the White House. You got to answer to the media. It's just tough, man. It's just tough because they run with these narratives. Like even with the narrative that Jerome Powell is a bad guy, right? That narrative is ran with, kind of like because like even like he was asked a question. What was that? Oh yeah, so he was asked a question when he was sitting with Congress.
Mm-hmm.
And he was asked a question about 2 million people losing their job. It's like, I mean, how you gonna ask someone that question and expect them to give an answer that you're gonna like? Like, there's no way that you can answer that question, no matter how you butter it up, how you want to say it. There's really no way to answer that question and really get a positive reaction. Like, if someone asked me a question, is like, how do you plan to deal with 2 million people potentially losing their job? I could be compassionate as whatever, but it's gonna be difficult for people to really internalize 2 million people losing their job.
That's a
It's
lot.
gonna be it's a
That's a
lot.
lot.
It's a lot to process.
Right.
So yeah, yeah. So definitely a lot to process. So I know you're getting a lot of phone calls, probably, people, like, yo, I'm trying to, level up. I just
Yeah.
think right now, I think right now people just need to be patient, man. Just be
Yeah.
patient. Opportunities is here, man, all over this market. When you come back to this market, you're going to take a look at a lot of these companies, be like, man, I remember where they was just trading sideways for a long period of time. Like, I'll be real with you. I do not see no fear in this market. I really don't see, I see a lot of fear in the media that's trying to be put upon, but I don't see a lot of fear in the overall markets, to be honest with you. I really don't see a lot of fear. Like, I don't think a lot of people are really fearful. I think a lot of people are nervous, I would say. Um, but I don't think that people are necessarily super fearful. And that's just kind of where, and you see that even by price action. You see that even through the way that the stock market is still in the same place. People are just waiting, I think, more so for the dust to kind of settle and clear before coming back into the market, more so than wanting to leave. So what we see with the banks, to TR's point, a great question that you asked, what would it take for the stock market to crash? It would take people becoming so uncertain, right? It would take people becoming so uncertain in what's happening in the market right now to then pull all of their money out. Well, maybe not all, but large
Mm.
sums of money out. That's how crashes, or what you want to call bank defaults, that's how that happens. So when everyone became super uncertain with what was happening with Silicon Valley Bank and people started taking money out,
Yeah.
that's what caused, you know what I'm saying? That's really what caused the market to, I mean, not the market,
People
but
fail. Yeah.
that's what really caused, the bank to really pull back, those banks to really pull back and, crash 60, 70, 80% of the day. And then the withdrawals that came in and happened. And that's what it takes. So it's going to take something from left field. And that's the reality here. So a lot on the line Wednesday. Tap back in with us next week on Monday. We'll be breaking down,
What's
what's
going on?
getting ready to happen here on Wednesday. We'll be talking a lot about it. Federal Reserve, man, and you heard it here first. So pretty much the game plan, man. If the Fed does not raise interest rates, expect the market to go up at least 2 to 3%.
So get ready.
If they somehow do raise interest rates, I don't think the market will like that too much at all. So that's the reality for me. Super appreciative of y'all tapping in. Tiara, always good to have the
Guys,
on. So
You, Lawrence.
good. The first episode back, man.
Yeah, and congratulations to you. You had a major life moment that happened. Congratulations.
For sure. Nah, I appreciate all the love, man. I appreciate you guys. Like, I'll be real with you. Really had a good time. Was seeing some of you guys in person. Some of you guys
Yeah.
were invited to the wedding, so definitely had a great time with you guys there. Super appreciative of you guys. Coming to the wedding. TR definitely. Really had a great time. You being there. So shout out to everyone that really came through and showed up at the wedding. Super appreciative of that, man. So yeah,
Yes. Yes. Listen, we're happy for you. And y'all, I actually caught the bouquet. I did not want to catch that bouquet. I was like, what was this? What happened?
yeah,
It was hilarious. It was hilarious. But congratulations
for
again.
sure. Nah, thank you. I think it cost you a nail catching the bouquet.
Y'all, I lost half my nail, bro. But I'm
Oh, man.
catch that bouquet.
Yeah, but it was definitely worth it. So it's crazy. I don't even know what it's like. This was my first wedding, so
Yes.
fill me in with catching the bouquet. What does that mean? I'm lost.
Like basically it's like I'll be like next in terms of like getting engaged and stuff like that. So my dad was very excited that I caught this bouquet.
So you
So
caught the bouquet. Okay. So that means you're next. You're next in line. Okay. We heard
okay.
it here first. You heard it here first on
No,
first
we
first.
gotta let's cut that out. Let's cut that part out. Let's cut that out. Cut it out.
I bet. But nah, man. Super, super appreciative, man. Much love to y'all. I'll see you
Yeah.
guys soon, man. And this is another episode of Monday Night Take. Shout out to Uncle Charles. We see you, man. Shout out to Unc, man.
And shout
Shout
out
out.
to Stacy too. Shout out to her. Shout out to Claire. I
Yep.
see y'all.
All right, y'all. Peace. Till next
All
time.
right. Have a productive week.